Everyone, and thank you very much for joining me. This is the morning market review. It's Wednesday, the 21st of June. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address is rshaw@fxcm.com. I'm just going to go ahead and bring up our disclaimers. I'll start off with a high risk investment warning. I'm just going to keep this on screen for a few moments. Hey Mia, good morning to you. Lovely to have you on the webinar as always. Thank you to everyone for starting in this morning. It's always appreciated. Thank you. And let's go ahead and bring up our market commentaries disclaimer. Okay, and our references will be MarketScope 2.0 and TradingView.com. Going to go straight through to TradingView here, and we're looking at inflation coming out of the UK. That is the chart on the left. The chart on the right is the core inflation out of the US. So these are both core inflations. Take a look at the trajectory of the core inflation out of the UK. That is not good news. That is bad news. It's moved in that northeasterly direction, and it is fairly steep. And you can just see how much how out of control it is relative to the US, which is moderating, right? So core inflation came in this morning at 7.1%, and we have the pound that has actually jumped. It's pulling back a bit at the moment, but it jumped all the way to R1. Cable is a pairing that we've been spending a lot of time on, and I want to spend some more time on it. I think that the interest rate, I beg your pardon, the inflation differentials here are important. In terms of economics, one of the theories that determines exchange rates is actually inflation differentials. It's one of the theories. So we've got a differential here. And what we can do is, let's just take this from a split screen to a single screen. What we can do is we can go back down to the 2-year yield. And what we want to do is we're going to GBO2Y. So we'll just take a look at the 2-year yield, the gilt. And let's just go through to the daily, see what's happening here. Good morning, Zanetta. Thank you very much for joining the webinar, and welcome as always. All right, take a look at the gilt here. A 2-year is a good proxy for monetary policy because the short end of the yield curve adjusts very quickly to changes in the costs of capital. So as the central banks change the costs of capital, the front end of the curve adjusts. So what we see here, you can see it's moving in that northeasterly direction. And what we can do is we can take a look at this relative to the US side. So if the 2-year yield is a good proxy for monetary policy, well, we can use that to our advantage in determining which of the central banks is the more hawkish. Okay, and the way we're going to do this, we're going to look at the spread between the 2-year gilt and the 2-year note. So we'll take the GBO2Y and we're going to subtract US O2Y, and we want to see in which direction the spread's moving. So we're getting a spread. Take a look, moving in that northeast direction. Okay, it is pulling back. This is quite odd. It's pulling back over the last sort of 2 trading sessions. I would suspect that we're looking at a higher trough here. Tomorrow is the Bank of England releasing its interest rate policy. We're getting at least 25 basis points there. Okay, they are in a really tough fight. And what we're going to do is we'll bring the pound US dollar underneath, cable underneath. So we've looked at this before. I just think that this needs to be a part of our watch list because there is a fair amount happening in this space of the Forex market. What's happening here in terms of cable? You're getting that northeast movement, right? This changes from red to black in that northeast direction. And what we'll do finally is we'll actually do a correlation coefficient between the spread of the 2 years and the pound US dollar. So let's bring up a correlation coefficient. Hey Howard, good morning to you. Welcome. And let's bring up correlation coefficient here. Okay, let's just make sure we change this to GBP USD. Okay, we'll use the FXCM instrument, apply. All right, and it's moving back into a very strong, robust correlation of 85%. By and large, it's been mostly positive with slight anomalies, but we're back to 85%. And I would suggest that as long as this correlation holds, and I don't see why the correlation should break, then the Fed skipped last week, Bank of England raising tomorrow. Well, cable is a pairing that we have to keep on our watch list. Then let's do a top-down analysis of cable again. So we did this yesterday. Let's just do it again. We've got the higher trough, higher peak. So in terms of a primary trend, remember we're looking at the weekly chart here. We've got a higher trough, higher peak. We've got an uptrend. Okay. So what we can do is we can actually put in a trend line. Okay. We can't put the trend line like that. Okay, I'll just show you something here in terms of the math behind trend lines. You can't put a trend line like this. Anybody that draws a trend line like this, in my opinion, not really getting a useful reading in terms of what the true power behind trend lines, because it's cutting. It cuts price over here. Well, what we want to do is we want to measure the momentum. We want to measure the gradient. So this is violating gradient, right? So we've got to go here. Got to go there. Okay. And we get a momentum reading. Okay, now we're in business. All right. So we've got this higher trough, higher peak. We've got a bit of red. Now, as soon as we've got an uptrend with a bit of red, it's time to pay attention, because there's a potential dip in an uptrend. Well, a dip in an uptrend is exactly what we want to try and take advantage of, right? We looked at this over here yesterday. We want to see if we can get into these dips on the uptrend. Okay, here's a dip. Looks like we've got some red. Let's go down to the daily. All right. We've lost that overbought, which is good, because once we overbought, we're in a situation where the risk reward profile is skewed towards the risk side. Well, that's not good for us as traders. We don't want to assume more risk. It's normalized somewhat. So the fact that it's normalized somewhat, okay, is pleasing. It's in zone 1. That's the upper red, upper blue. We've got the pullback, and now we want to see, is there a chance for us to potentially get in on a pound US dollar? Now, we've got to be very careful here, because there is obviously some volatility that's come in with the inflation announcement. Okay, so we have got a crossover over here where the shorter term green 5-period exponential moving average is starting to pull away from the orange 10-period exponential moving average. We're getting that angle in separation. We want that angle in separation to hold. Take a look where the stochastic is. Stochastic is in that upper quintile. So if it maintains in this upper quintile, we could get a swing here. So just keep an eye on that. Okay, just keep an eye on that. It looks as if this one should stay on the watch list. We're getting the crossover. We're in the upper quintile. It all depends now if we maintain in the upper quintile. If we drop out of that upper quintile, then the opportunity is lost. We'll have to revisit at another time. But at the moment, we wanted to stick in this upper quintile. Let's take a look and see what's happening on the US dollar side. Because if there is going to be some sort of movement in terms of cable, and let's just assume that movement is up. Then we want to see dollar pulling back as well. So dual type of analysis here. So let's just see if there is any give on the dollar side of things. So we'll do a top-down analysis on the greenback as well. Mia's just asking, how long would I want it to stay in the upper quintile? I'd want it to stay in the upper quintile as long as possible. Let's do the dollar analysis, and then I'm going to come back to that question there, Mia. So just let's see what's happening on the dollar side, and then let's explore the stochastic again. So the issue with the dollar here is that it's not trending on a primary basis. Okay, it's range bound. It's range bound in a symmetrical triangle. There is slight bearishness to it because the RSI is below 50. If we go through to the daily chart, we're still in zone 3. That's between the lower blue and the lower red, and it looks to me as if this is a potential rally in a downtrend. Again, we looked at this yesterday. A rally in the downtrend. We want to see if we can get if we can pinpoint the rallies in the downtrend and exploit those. Now, what we want to do is go down to the hourly just for timing purposes. Let's clean this up. This is quite messy. Okay. So ideally, what we would want the US dollar to actually be pushing this way. If there was going to be some sort of opportunity on the cable side. So if we can get dollar pushing towards the southeast, whilst we're getting cable to push to the northeast, then we're getting some sort of synchronization going. So the dollar at the moment actually not cooperating to the extent that we would like it to. So again, keep an eye on this. The fact that it's not cooperating is a signal in of itself. It's telling us to be cautious. We would need the EMA to cross to the downside. We would need the stochastic to cross to the downside. We would need the stochastic here to hold in the lower quintile. Now, the question was asked, Amir, how long do you want it to stay in the upper quintile? Well, here, let's call this sort of the upper quintile, even maybe the upper quartile, just over there. And you can see the longer it stays in this region, the more the swing. It's generally telling you that there's an underlying positive momentum. Let me see if I can find another one for us. If we go through to NASDAQ, let's see what's happening on NASDAQ. Zanetta just saying we need some sort of news to move the dollar. There is going to be some news today, Zanetta. There will be news today. What's that news? We're getting Fed Chair Powell testifying on Capitol Hill. So there's going to be some volatility there. So just be aware of that. What time is that taking place? It's taking place at 4 p.m. ZA, which would be 3 p.m. UK. Here's a nice one. So it hangs out in the lower quintile, and you get quite a nice swing here. Could have. So that's does that sort of explain it, Mia? I hope the idea is we want it to stay in the lower quintile as long as possible. Effectively, what we're looking at. Let's take this out. Think about it in terms of a bar chart. In a bar chart, you've got a range, and typically you've got your open on the left. Let's just take the open out. I don't think we need it. And your close will be on the right-hand side. So if I had to say to you, what kind of a bar is this? You'd say to me, Russ, that's a neutral bar. We've got our close. It's right in the middle. It's right in the middle of the range. So I'll say, okay, what kind of a bar is this? You'd say that's a bullish bar because we're closing right near the top of the range, right near the upper quintile, right, or the upper quartile. If I had to say to you, what kind of a bar is this? You'd say, Russ, that's a bearish bar. We've closed right down on the range in the lower quintile. So that's effectively what the stochastic is. That's effectively what the stochastic is telling you. Exactly. Neutral, long, short. Exactly. So when you got the stochastic, what you are looking at effectively, there's a little bit of complexities to it. I'll tell you what the complexities are. You're looking at a range between 0 and 100%, and you're looking where is the close relative in terms of that range between 0 and 100%. Right now, Nasdaq's in no man's land. See that? We're in no man's land. The complexities here is that we are applying a slowing factor. So I've slowed this down by 5 periods. So it's a 15 bar slowed by 5 periods. So that's the complexity. But ideally, the way that the stochastic works and the brilliance behind the stochastic is it's effectively a bar chart. That's effectively what you're looking at. All right. Let me see. Are there any other questions there? Just let me know. We're going to just see if I'm missing something here. Yeah, so above 80s is an upper quintile, below 20s, lower quintile. If you want to give it a little bit more room to breathe, you can go into quartiles, which would be above 75, below 25. 80 is being very strict, but it's sort of the direction I've tended to go to. All right, going to wrap up here. We're going to go through to our Crypto Minute. Please join me for that. Thanks very much, guys. See you at the next webinar.